Hello there, what's up? How's it going? So, in this video, I'm going to be talking about the gaps. So, there are a lot of gaps in the market, and what I'm referring to is something like this. Something like this. So, gaps happen when there's a move in the market where there's just a gap in price, where there's no trading that occurs at a certain point. But when you go on a smaller time frame, sometimes you find that the gap is kind of like not there because it seems like there's one huge candle that goes across it. But in this case, you can clearly see that there's a gap. Oh yeah, this is the 4-hour euro dollar chart. And what I'm looking for is that gap. So this is another gap, and this happens quite often. All right, this is another gap here, and this is another gap over here, another gap. So this is a common occurrence in the markets, and why I want to talk about it is because it's one of the things that this is another gap over here, another one, another one. This is the kind of thing, there's a gap here. If you go to a smaller time frame, you see it. There's another one here. So this is so common. It happens so often, another gap here. So you're likely to see a gap almost once a week or something like that. Maybe twice a month, you never know. It's just a random occurrence, but it happens frequently enough that when you don't see it on a smaller time frame, it's probably because it's already there on a higher time frame. So it's another gap over here. So there's so many gaps in this market, another one here, that if I were to mark all of them, wouldn't be able to finish. So I'm just gonna focus on the one gap in particular, which is this one. All right. So I'm just going to focus on this one. And this gap is found on the weekly chart, alright? So I am looking at this. Oh, excuse me. I'm looking at this on a weekly level. And here's our gap. Alright. So this is the euro dollar. And what happened was price was doing its thing, right? It was moving, and it bounced at this support and then it gapped up. So what this gap showed was the fact that there was a lot of momentum to the upside. So there was a lot of momentum to the upside that price did not even trade at this level. It was just too hot. So what happened is that price just started moving higher and higher, and this gap was just left like a gaping hole in the reality of the markets. So the fact that this gap occurred is a clue to something, and the clue that this information gives you is the fact that the market price is going to come and fill this gap sooner or later. And in this situation, what happened is that the market kept on going higher without filling this gap for years. Okay, this is weekly chart. This is a weekly chart. So the whole year is just going up and going higher until it ranged here, and then it started coming down. And when I discovered this gap, I don't know, it was somewhere here in the middle of the market, sometime in 2019. So then I just knew that price was gonna come back and cover the gap because that's what it has to do. So I'm just gonna go back to a smaller time frame again. I just want to show you the fact that, all right, I'm just gonna find a gap in the recent trading sessions. I'm just looking for a gap. Okay, not that one. That one is just too big. All right. Um, maybe this is too small, but then we'll just take it as a first example. We'll find a better one. So there's a gap over here. This is a bullish candle. This is a bullish candle. So this shows you the price opened from this top and then it closed there. And then the next candle opened at this bottom and then it closed there. But during the 4-hour time period, the gap was closed. So price fulfilled that closure. So this always happens. There's always closure in these gaps. But let's find a better. I'm gonna find a better example of what I'm talking about. All right, this is a good example of what I'm talking about, and this would just be our last example in terms of this chart. So there's a gap here, huge one, that shows that price has gone down. But what happens? The price comes back and fills the gap to the dot, yeah, to the pip, and then it drops for 300 pips. But then again, price comes and finds some resistance at the gap, and then it breaks through the gap and goes above. And this is another gap over here. Price is going up, there's a gap, and goes higher until this gap is filled in the downtrend, where price bounces and retests. This area where the gap is an area that formed a base of support, and that support turned to resistance. All right, so this is the nature of a gap. So oh yeah, this is another one, another gap here. As price was going higher, there was a gap, so you knew that this drop was imminent. All right, so let's just go back to the weekly chart. So you've seen that all the time, like with a high degree of, like 100% of the time, the gap has to be covered. Like all the time this happens. But the only variable is the amount of time it takes. This gap was finally covered in 2020, but it was made in 2017. So you knew at some point the market is going to come back to this price, but then it took it 3 whole years to come back to this price. So you know with certainty it's going to happen. So all the time this price is going higher, there were so many people who were just shorting every time it reaches resistance. They would short here, lose money. Short another time, lose money, knowing that price has to cover the gap. But at the same time, the market can be irrational longer than you can be solvent. So a lot of people lost money if they were trading based on the gap and not based on the price action. Because from this gap, certainly I would have expected it to come back and then resume the trend, go as high as it went. But instead, it went up close to 2,000 pips, and then it dropped close to another 2,000 pips. So it went up 1,700 pips and dropped 1,900 pips. This is what happened. So right now the gap has been closed. The gap has been closed. So now the market has to initiate a new direction. All right. So now I'm looking at, all right, so this is the market right now. Let me just go to the 4-hour. All right, so this is the euro dollar. This is the euro dollar chart 4-hour right here. Okay, as you can see. So now I'm just gonna scoot over to the US dollar chart. So the trade in all of the major currencies is done through the US dollar, and the price of the US dollar determines the price of all of the other currencies that we're trading, be it Rand or Singapore dollar, whatever it is. The dollar is the de facto world currency. Okay, so what's happening on the dollar index is very interesting. All right, so from a pattern perspective, we have something that is forming. Of course, it forms both on the dollar and on the euro. So this is the 4-hour dollar index, and this is the 4-hour euro chart. So you see that there is this shape that is evident on both the euro 4-hour and the dollar 4-hour. So all of these are inverse. So when the dollar is strong, this will go down, the euro dollar will go down, but this chart will go up. This is when the dollar is strong. So what's been happening in the past couple of days is that there is a gap that formed recently, and the law of the gap says that it will have to come back to this level. So whatever's gonna happen, I'm anticipating that price is gonna come back here, and I thought that it was gonna cover this gap twice, but it didn't. In fact, it formed what looks to be like a double bottom ish kind of thing, but it hasn't broken up to the upside yet, broken out to the upside, because there's all this these pips showing so much uncertainty. And in any case, the price is still in a range. It's been ranging for the past couple of weeks, but it's about to start popping. Now, taking a closer look at the dollar index, we have this gap which is near, all right? And now when you look up here, we also see that we have this gap over here, right? There's this gap over here. So whatever happens, there's a time when price will reach this area. So this might pop and go up here right now, and forget about this gap and drop from this top and cover it, or price will just drop it this trend line, cover this gap, then go back up. All right, this is what's happening in the dollar. However, there's more. Okay, so this is what it's all about. So now look at this other gap. So there's this other gap here hidden at the bottom over here, which is showing our support, which is showing where the level of support is. But this is a real thing, a real gap. And what we are seeing from a bird's eye view, all right, so what we're seeing from this perspective is the fact that price, oh, it's just too big. I just don't like the aesthetic. Oh yeah, this is another gap that was obviously covered, and this is another gap that was obviously covered. Anyway, yeah, so this happens so many times. This is another one here that was covered. So if you look at all of these gaps, you discover that they will always get filled. They will always get filled. Another one that was filled. So you just have to know the market direction. Another one here, exactly. Let's see how this one was filled. So this one must get filled. See, it was filled by another gap. It always gets filled, and not to say like filled a little bit, it gets filled to the pip. Okay, just like that one, hidden gap, because price closed low here and opened high there. This gap got filled. You see, like this always happens. So there's some micro gaps, some bigger gaps. This is also another gap. Price closed here and it opened low there, and obviously it got filled. And this is a pattern that recurs constantly. And if you see it, you see it. This is another gap that got filled. Price went higher. So you have to know what is happening in the price action. For example, in this gap, you discover that, all right, price is already coming up, all right, so it bounces here, almost bounces here, and then it comes back. So, all right, so we just make this our level of support here, yeah, it's a bit tricky. How would I do it? Like, I would see this trend line and this level of support, perhaps. However, you just see that the price is in an uptrend, and there's an underlying level of support, and price bounce at support to the gap, but all of these candles showed you that price has to fill this gap, and it went higher. And when it did go higher, it came back and retested the level of the gap over here with this candle, tested back the gap, and this might have been your signal to go long because of this candle and the price action that's just showing it. Okay, so what's happening right now? All right, let me just complete this drawing so that you can see from different perspectives. Some people just trade patterns, some people just trade naked and whatever. However, what's happening in price right now is that it is in the middle of a range, but inevitably price is gonna go higher and it's gonna go lower. So this would be a nice time if you can just catch one of the trends that will be a couple of 100 pips. So you can catch this on the euro, you can even see it on the Aussie. All right, let me show you another gap, another impressive gap. Is it visible on this one? I want to show you a really nice gap that if you're watching this, I hope that you can trade that. Alright, it's not visible on this chart, but it's impacting this chart a lot. And I'm just gonna open the loonie. Where is it? Alright, here we go. Just gonna open the loonie. Okay, must be on this one. Must be on this one. All right. You know, generally when you see price moving parabolically like this, it's usually a signal to tell you that there will be another move back to that level where well, I can't see this gap, but it's very apparent when you see it. Maybe it's on a smaller time frame. Oh yeah, exactly, this one. Anyway, so on a weekly level, what I was trying to explain is that when you see price move like this, in a parabolic move like this, it means that there are a lot of people who entered here, right? And they have made money, and at this top they're taking their profits. As they take their profits, it drives the price down. But what often happens is the fact that the people who place their orders here need to get their orders tested to see if this is the true direction of the market. So the market usually comes back down after such a parabolic move. So a move like this, a move like that here, it's another parabolic, is usually a sign of a gap somewhere, because when this move is occurring, there are gaps that happen. But here on this level that we're looking at, we see that there is a huge gap on the daily level, which would imply, since this is the dollar Canadian, which would imply that for this gap to be filled, there has to be a time instance where the dollar is weaker relative to the Canadian dollar. The American dollar should weaken and yield to the Canadian dollar until this gap is filled, and we will see that happening, especially since the dollar chart is already showing us that it is prone to go in both directions, and that's likely to happen soon. So yes, this is how you trade the gap. And the Canadian currency, the New Zealand currency, and the Australian currency are all linked. That's why I was looking for this same gap in the Aussie. Let's see if we can find it. So here in the Aussie, if the dollar gets weaker, the Aussie dollar pair should go higher. So here on this chart it is not so visible, but already this is going up. So the Aussie is strong relative to the dollar since March. All right, since March, which is a pretty nice move. Let's see. Yeah, it's about 1,000 pips in the Aussie's direction. So when this happens, it's either that we trade with the trend, that the likelihood of this trend to continue will happen, and that's usually the safer side until it covers certain areas that it's supposed to, according to economic principles. All right, so quick recap. I'll just use this as the proxy for all trading currencies. So there's a gap here at the 94.8 level in the dollar chart. So we'd see maybe the support of 94.5. Okay, so it doesn't mean that the price is gonna stop here. It just means that the price, the moment, like it just means that there's a vortex that is pulling the price toward it. So it's just like an open vacuum of space that has to be filled, and the market will fill it, and there is gonna be a huge precipitous drop down. Especially if the price goes up first, then this has to be filled, and sequentially this one has to be filled as well. So however this goes, there's a huge trade that if you missed this parabolic move, there's going to be another one that comes from this top to this bottom, or from the bottom to the top. But right now we're Malcolm in the middle, so we're just watching what happens. So you could either just sit and watch and see what you can do, or by the time you watch this, since I'm uploading this today, by the time you watch this, just find out where the price is in relation to this gap. In any case, if you've missed the trade altogether, you now know a certain way of looking at price movements that determines the direction of currencies and price action with a high degree of accuracy. With this method, you still have to be able to know how to determine the direction of the price, because just because the price gaps down like this does not mean that the price is going down. It did cover the gap, but it didn't cover it completely. Like in this situation, I don't want to see any pippage left. So when this happened, you could have known it was a fake out, which caused a double bottom, and through this the price came back, covered the gap, all right, bounced around the gap, turned into support at the gap, and then you could ride this out if you were awake to trade this at midnight. And the same thing happened here. There are two gaps in the same movement, and here this so all of this is just information that you can profit from. So thanks a lot for watching this, and if you're interested in more information on how I trade, you can just check out my books in the links below. But other than that, I'll see you soon. Thank you a lot.